Hello everyone. In July 2020, the US dollar suffered its worst monthly performance in a decade as the country struggled with the economic fallout of the pandemic. The currency's tumble has raised concerns that its dominance of the global financial system could be waning, and the currency strategists have warned that the dollar will be losing its place as the world's reserve currency. Since the end of the World War II, the dollar has been the world's most important currency, the most reserved currency, and the most used currency in trade and commerce and transactions worldwide. Many economists think that the concerns for dollar is over-exaggerated. While it is hard to imagine that the dollar will lose its position as the world's reserve currency, a glance at history tells us that it is far from impossible. In the 17th and 18th century, it was the Dutch guilder who filled the role before the Spanish dollar took over. Subsequently, it was the sterling pounds from 1815 to 1920. In each case, the nation's dominance on trade and finance was responsible for the currency status, though central banks and regulatory agencies played a leading role. In global trade, as showed by IMF data, the US lags behind the Eurozone and China in overall volume of exports and imports. So it seems a good time to review any alternatives to the dollar, even though none appears to knock it off as the world's reserve currency. The first dollar, as it is known today, was printed in 1914, when the Federal Reserve Bank was created. Less than 6 decades later, the dollar became the world's reserve currency. The Federal Reserve Bank was created by the Federal Reserve Act of 1913 in response to the unreliability and instability of a currency system based on banknotes issued by individual banks. At that time, the US economy had overtaken British economy, even though the British were the leaders in commerce and most of the transactions were being still done in pounds. Also at that time, most of the developed countries pegged their currencies to gold to create stability in currency exchanges. However, when the First World War broke out in 1914, many of the countries abandoned the gold standard to be able to pay their military expenses with paper money, which devaluated their currencies. In 1919, Britain was finally forced to abandon the gold standard. By that time, the US dollar has already become the world's reserve currency. During the Second World War, United States served as the Allies' main proprietor of supplies and other goods, collecting much of its payment in gold. By the end of the war, United States owned majority of the world's gold. Then came the Bretton Woods Agreement, which created the World Bank and the International Monetary Fund, and also established US dollar as the new gold, as it held most of the world's gold supply. The dollar continued to dominate post-World War II boom years. The rise of the dollar was built based on 4 pillars. First, the robustness of the American economy, the trust and belief in the American financial system, the wealth of the US financial institutions, and America's leading role in international affairs. In 1944, almost 76 years back, 700 representatives from 44 nations traveled to the Mount Washington Hotel at Bretton Woods to come up with a system to manage foreign exchange, which does not put any country into any disadvantage. Out of the Bretton Woods came the World Bank and the International Monetary Fund, and also one of the most important role for US dollar, international reserve currency. It was decided that the world's currencies will not be no longer linked with gold, but rather it will be linked with dollar, which in fact will be linked to the gold. It became the main currency for the world to trade and save. The United States, during those times, who controlled most of the world's gold supply, took a pledge at Bretton Woods that they will fix the dollar rate with gold at $35 per ounce. Other countries then fixed their currencies to the dollar rate, and thus United Dollars became the central spoke of the system. Later in the year 1970s, the Bretton Woods exchange system collapsed when President Richard Nixon took the dollar off the gold during times of high inflation, unemployment, and many industrialized economies going in for floating range of exchange. At that time, some of the economists predicted the downfall of the dollar, not that it would lose its value, but that it would lose its dominance in the world as a de facto currency. Although there has been periods of stagflation, high inflation and unemployment, the US dollar has remained as the world's reserve currency. The International Monetary Fund, the body responsible for monitoring the international monetary system, recognizes 8 major reserve currencies: the Australian dollar, the British pound sterling, the Canadian dollar, the Chinese RMB, the euro, the Japanese yen, the Swiss franc, and the US dollar. The US dollar is by far the most commonly held reserve currency, making up more than 60% of global foreign exchange reserves. The next closest reserve currency is the euro. It makes up 20% of known central bank foreign currency reserves. The chance of the euro becoming a world currency was damaged by the Eurozone crisis. It revealed the difficulties of a monetary union that's guided by separate political entities. In the foreign exchange market, around 90% of forex trading involves the US dollar. The dollar is just one of the world's 185 currencies according to the International Standards Organization list, but most of these currencies are only used inside their own countries. Theoretically, any one of them could replace the dollar as the world's currency, but they won't because they aren't as widely traded. Moreover, almost 40% of the world's debt is issued in dollars. As a result, foreign banks need a lot of dollars to conduct business. This became evident during the 2008 financial crisis. Non-American banks had 27 trillion US dollars in international liabilities denominated in foreign currencies. Of that, 18 trillion was in US dollars. The financial crisis made the dollar even more widely used. In 2018, the banks of Germany, France, and Great Britain held more liabilities denominated in dollars than in their own currencies. The dollar's strength is the reason governments are willing to hold the dollar in their foreign exchange reserves. Not only this, the dollar is also the currency of choice for international trade. Major commodities such as oil are primarily bought and sold using US dollars. Some countries, including Saudi Arabia and Oman, still peg their currencies to the dollar. Factors that contribute to the dollar's dominance include its stable value, the size of the US economy, and the United States' geopolitical importance. In addition, no other country has a market for its debt similar to the United States, which totals roughly 18 trillion US dollars. It is the relative strength of the US economy that supports the value of the dollar, and it is because of this reason the dollar is the most powerful currency. The dollar is still the king. Even though public debt of the United States is enormous, 25 trillion US dollars and growing, its politics recently delivered the longest government shutdown in American history. Its banking system, only a decade back, suffered from the worst financial crisis since the Great Depression. But money tells a different story. The dollar has in recent years amassed greater stature as the favored repository for global savings, the paramount refuge in times of crisis, and the key form of exchange for commodities like oil. The enduring potency of the dollar enabled the Treasury to find buyers for government savings bonds at enviably cheap rates. According to the Bank for International Settlements, dollar-denominated lending to borrowers outside the United States, excluding banks, rose between late 2007 and early 2018, giving a clear indication that the American currency has been gaining power. It increased to more than 14% of global economic output from less than 10%. This has played out despite a chorus predicting after the financial crisis that the dollar might finally surrender some of its dominance, and it was time for someone else's money to have a turn. By contrast, the dollar looks like a uniquely rare creature on the global landscape. There is no alternative to the dollar. The preference of the dollar in trade and finance makes it the most attractive currency for countries to hold and therefore difficult to replace. Moreover, the most commonly floated alternatives, the euro, the RMB, and the IMF special drawing rights have their own problems. The euro is the second most used reserve currency, accounting for roughly 20% of global foreign exchange reserves and a viable challenger to the dollar. But the lack of a common treasury and a unified European bond market limits its attractiveness as a reserve currency. The euro has also been afflicted by weak governance and serious public debt problems. China, eager for the status and perks that come with the issuing a global reserve currency, has been trying to increase the role of the RMB, also known as the yuan. It currently accounts for just 2% of global reserves, and China's efforts have been hamstrung by strict controls on the flow of money through its economy. But global usage of the RMB has been steadily increasing. China is also pushing to increase the use of the RMB to denominate its own trade. But the Chinese RMB remains constrained by China's array of capital controls, unfolding economic slowdown, concerns about its soaring debts, and its still relatively primitive financial markets. Now, if you look at the special drawing rights, there have been calls to use the IMF's special drawing rights, an internal currency that can be exchanged for hard currency reserves, as a global reserve currency. The value of SDR is based on 5 currencies, that is the euro, pound sterling, RMB, US dollar, and yen. Proponents argue that such a system would be more stable than one based on a national currency whose issuer must respond to both domestic and international needs. The idea of using SDR was endorsed by the governor of China's central bank in 2009. Several economists have also supported a large role of SDR. But for SDR to be adopted widely, it would need to function more like an actual currency, accepted in private transactions with a market for SDR denominated debt. The IMF would also need to be empowered to control the supply of SDR, which, given the United States' de facto veto power within the organization's voting structure, would be a tall order. The lack of a convincing alternative is why the dollar has been able to command dominance for such a long period of time. Ironically, the pandemic has also expanded the dollar's dominance. The rapid growth of USD denominated debt to fund COVID-related expenses around the world in the form of multilateral loans, sovereign and corporate bond issues, bank loans, and more further establishes demand for dollar liquidity in the future. It also reinforces its use as pricing currency for international transactions. Only once before has a dominant currency been unseated when the dollar took over from sterling. Such a dramatic shift in the global geopolitical order is unlikely to arrive anytime soon. In fact, for now, the pandemic will strengthen the dollar's currency dominance. Now, if one has to think of a one world currency, then simply this is not going to happen. One reason is political. There is no political will to have one government or one currency in the entire world. The second reason is that we don't see the whole world using US dollar anytime soon. This has to do with some economic theory called optimal currency area, meaning that a particular currency will be working in a particular geographical area, for example, a country and not a continent. This is because different countries or regions will be experiencing different economic conditions. For example, one country may be in recession, whereas the other country may be booming at the same time. Moreover, when there is only one currency, then there will be only one monetary authority, meaning that the entire world will have one monetary policy. This is not possible because different regions and different countries will require different policies which is suiting to their needs. In March 2009, China and Russia called for a new reserve currency. They wanted the world to have a new reserve currency which is disconnected with individual nations and should be stable in the long run. China was more concerned because with trillions of dollars they hold, if inflation sets in, then it will be worthless. As such, China called the International Monetary Fund to come up with a new reserve currency and replace the dollar. %80 of all 100 denominated dollar bills in circulation are now held outside the United States. It was only 30% back in 1980. The steep rise in number of $100 bills held overseas is a signal that people around the world recognize the dollar as the de facto global currency. It's not only individuals that are keeping $100 bills, it's foreign governments as well. Governments don't accumulate physical dollars in the central banks, but they do buy up loads of US Treasury bonds and Treasury bills which are valued in dollars. As of January 2020, Japan and China each owned more than $1 trillion in US dollars Treasury securities, followed by the United Kingdom $372 billion US dollars and Brazil $283 billion US dollars. When economic powerhouse like China holds $1 trillion US dollars in reserve, that's a good sign that the dollar is still considered the mightiest of the global currencies. But strategists say the country's economic recovery is in question. Given its weak coronavirus response, the dollar had also reacted to the country's surging deficit and the prospect of US interest rates remaining lower for longer. However, analysts argue that recent fears about the dollar losing its status as the world's reserve currency are overblown. The dollar index decline since March can be attributed to reasons other than the currency's reserve status, including low interest rates and Europe's steps to stimulate the continent's economy. In fact, the coronavirus crisis has reinforced the dollar's role as the key global currency. The greenback surged and demand jumped in March as the pandemic swelled in the US, Europe, and elsewhere. According to COFA, data disclosed on a quarterly basis by the International Monetary Fund, the US dollar accounted for 61% of the $10.9 trillion in allocated foreign exchange reserves in the first quarter of 2019. While that's down from around 70% at the turn of the century and more than 80% in the 1970s, it's still way ahead of the second-placed euro, which accounted for 20% of allocated reserves in the first quarter of 2019. To this day, the US dollar, backed by the largest economy in the world, is widely considered a safe haven, a reliable store for value by people and governments in regions suffering from political or physical instability. The dollar currently represents about 60 to 65% of global currency reserves reported by central banks to the International Monetary Fund. That share may come down a bit over the next 2 decades only because central bank managers would want to raise the holdings of other reserve currencies such as the euro and RMB. The euro and RMB are likely to boost their share of global reserves, but at a gradual pace. What may actually happen over the next 30 years or so is that we may have a world where we will have three important currencies: the dollar, euro, and RMB. So let us look at the key takeaways. First, the first US dollar as it is known today was printed in 1914 upon the creation of the Federal Reserve Bank. Secondly, during World War II, the US supplied the Allies and got paid in gold, propelling the US to the largest holder of gold. Thirdly, the dollar has been the world's principal reserve currency since the end of World War II and is the most widely used currency for international trade. Fourthly, after the war, countries linked their currencies to the dollar, which was linked to gold. The gold standard ended, but the dollar's reserve status remained. Fifth, the greenback is seen as a safe asset despite the US having the highest number of COVID 19 cases in the world. Then the currency is not as volatile as its emerging market counterparts. And lastly, other currencies, including the euro and Chinese RMB, remain far behind the dollar in global usage. So, to conclude, as we have seen, more than 61% of all foreign bank reserves are denominated in US dollars. Many of the reserves are in cash or US bonds, such as US treasuries. Moreover, 40% of the world's debt is denominated in dollars. This brings certain benefits to the US economy. The country issuing the reserve currency is not exposed to the same level of exchange rate risk that other countries are and can also afford to borrow large sums of capital more cheaply. However, reserve status also has its drawbacks. These low borrowing costs can encourage public and private sectors to spend more frivolously, racking up debt as a result. The reserve status is based largely on the size and strength of the US economy and the dominance of the US financial markets. Despite large deficit spending, trillions of dollars in foreign debt, and the unbridled printing of US dollars, US Treasury securities remain the safest store of money. The trust and confidence that the world has in the ability of the United States to pay its debts have kept the dollar as the most redeemable currency for facilitating world commerce. In recent years, there have been calls for an alternate reserve currency ranging from countries like China and Russia. Yet, for the foreseeable future, it's hard to imagine any other currency gaining prominence over the US dollar. Hope the information has been useful. Thank you.